afternoon. So I'm Tom. I'm one of the co-founders of Mutual Credit Services, and the first thing to say about us is that we are a tiny startup based in Liverpool, and what that means is that all of our projects are done with partners. And for this Isle of Man Innovation Challenge, you can see there's an array of logos there, and we're doing this under the banner of Locally Isle of Man. And we describe ourselves as a network FinTech for social and environmental impact. And hopefully in the next 10 minutes or so, I'll give you a bit of an idea of what that actually means. But first, a bit about myself. I'm actually a physicist, but like probably everyone in here, I've had some pretty vivid economic experiences. I was doing my A-levels when the 2008 financial crisis happened, and everyone told me at the time, oh, it'll be fine. You're about to go off to university to study physics, and by the time you graduate, the economy will be back to normal. It'll be fine. And of course, it didn't. It never went back to normal. I actually ended up doing a PhD at the University of Liverpool, and I had a great time doing nuclear physics. I was doing gamma radiation detection and imaging for environmental science applications. But what became harder and harder to deal with as I was doing that was the contrast between, the great time I was having in the lab with this really kind of tunnel vision, which academia imposes, and looking out the window and, frankly, things like climate change, getting increasingly freaked out and thinking, there are frankly bigger problems we've got to face up to here. And very quickly, just to run through some of the other team members' backgrounds, we have computer scientists, ecological economists, specialists in tourism and World Heritage, and data impact analysis for local government. And so I decided I basically had to stop doing physics. I had to try and help for myself understand how the economy works and find like-minded people. And the analysis we've kind of arrived at is that we think there's a kind of missing middle lens on the economy. What I've put up here is a representation of, I suppose, what you might call the microscopic view, which is represented by the balance sheet of an individual company, the company in isolation. And of course, many problems you try to solve as a company in isolation. You look at your operations, you look at how you can improve what you do. But then there's another lens, which is the kind of aggregated statistical lens. And I've put here census results, but these are things like GDP, employment, all those kinds of things. But really, we think neither of those lenses, despite being totally dominant, are actually particularly empowering. And in particular, if you think about what most businesses actually have to deal with day in, day out, it's cash flow is their lifeblood. But managing cash flow requires time, expertise, and appropriate tools, which are not necessarily available. And so what we think is that there is this kind of, neither of these two lenses can actually really tell us very much about what it means to be an SME, for example, in Douglas. And so we live with this fear, uncertainty, and debt. This manifests as chronic late payment and cash flow issues, businesses going insolvent, not because they're a bad business, but just because they have these cash flow management problems. And at the moment, the existing solutions are really quite inadequate. There's, of course, invoice factoring, there's getting a loan, there's tactical late payment, there's ignoring the problem, being a busy fool. But actually, all of these things are not only bad for the business themselves, but actually can be harmful to their trading partners and to the wider economy. But if we had a network lens on the economy, we'd actually be able to understand this interdependence a whole lot better. And so this is what we say is the potential for filling in the missing middle. And what this data shows is some SME data we did as a result of a survey in Lancaster in the northwest of England. And we basically went around and asked some small businesses, tell us a bit about your local spending. And the nodes of businesses and the arrows represent payment obligations. And what we can immediately see is that even in a really, really small network, there's a huge amount of complexity and obviously a huge number of things which can go wrong. But actually, because of the digitization of accounting data through invoicing platforms like Xero, Sage, QuickBooks, it's actually becoming possible for the first time to assemble this lens. And once we have this network lens on the economy, all sorts of debt management interventions suddenly become possible. And I'm not going to explain these mechanisms in detail. Many of you, if you come from a finance background, will understand these diagrams immediately. But the outcomes effectively are freeing up businesses to actually, do what they went into business to do, rather than chasing payments and worrying about cash flow. These mechanisms have a counter-cyclical effect on the economy as a whole in the event of credit crunches, and they have positive externalities, kind of spillover effects from outside the network. And if we look at the Isle of Man, for example, this is an analysis based on an algorithm from one of our collaborators in Formal Systems, which looks at the optimal way to inject liquidity into a debt network. And what's shown here is 3 independent sources of liquidity, and that could be fiat currency, it could be crypto, it could be mutual credit. And of course, on the Isle of Man, there's Pound Token as a stable coin, and there's Coin Corner, which has clients who accept Bitcoin. And the point here is that we can, through network analysis, we can optimize payments in order to achieve maximum impact. And that's all great in principle, but actually the reality is just because it can be done doesn't mean it's going to happen by magic. Our whole approach is that instead of doing a whole load of work on designing a product and then, because of the inevitable poor market fit, because we've designed it in a vacuum, engaging in hard sales mode, we think that's particularly counterproductive when you're dealing with diverse economic networks which rely on collaboration to deliver maximum impact. And so we take a co-design approach whereby we're the domain experts, but what really matters is working really, really closely with the local experts to build shared understanding and to build economic interventions which fit the context and result in healthy feedback loops. And just to give an example of a proposition which we kind of worked up over the course of the Innovation Challenge, the TT race is an example of economic development which has been driven by tourism. But what's almost certainly true is that when there's a TT race, there are going to be all sorts of liquidity crunches, payment gridlocks emerging, and actually probably there's going to be a significant amount of leakage. Much of the economic activity generated as a result, the wealth is not going to stay on the island, it's going to leak out one way or another. And so we think that with the tools we've got, we can at least start to address and understand what kind of interventions might help to move events towards something more like more sustainable and potentially even bring in some circular economy aspects. But actually, at the end of the day, one-off interventions aren't really enough. In the context of what people are increasingly referring to as the omni crisis, actually, we need a much more kind of systemic intervention capacity. We need the ability to underpin entire new markets. And actually, in that instance, it's not the finance, and it's certainly not the tech, which is the hard part. It's the governance, it's the trust, it's the collaboration, it's the legal structures. And so whenever we're building a proposition, we always kind of bake that in at the core. And actually, MCS, we ultimately see ourselves not as a company with a product to sell or a company which gets all this data and owns it and owns the network. Actually, the members own their data. We are merely a service provider to that network. And so we've got a whole legal design which comes in order to underpin these markets. And we think really now is the right time to be doing this because, the confluence of social and financial, economic and environmental change is really, there's this huge latent appetite for doing things differently. And so we think we've arrived at the right time. And just to give you an idea of where we're at the moment, we are building up to a soft launch of Local Loop Merseyside. As I say, I live in Liverpool, and what we're hoping to do over the course of the summer is start to introduce these ideas to the local business community. We're working with Liverpool Chamber of Commerce and the University of Liverpool and other partners, and we're building up a kind of critical mass of early adopters to start sharing data, start understanding the local economy as a network, and then we're going to be building up towards a phased commercial launch from the end of this year and into the start of next year. And in fact, we've just won an Innovate UK Smart Grant in order to support that work. And then our entire idea is that we effectively become a franchise. And we've already started to assemble a bit of a pipeline of franchisees who would like to replicate the work we're doing in Merseyside and offer it more widely. And that's across the UK and right across Europe. And so, I understand that in pitches, it's normally traditional to say something about, we're going to go global. And so there you are, we're going to go global. Thank you very much. And if you'd like to come and talk to me about any of these ideas, the idea of the economy as a network and a network lens, by all means, come up and say hello.